Hello, 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 and welcome to Property Gamechangers live on the Property Gamechangers Facebook group. Every week, we are here talking to people who have changed the game in property. So grab a cup of coffee or a nice wine and soda and join us. We are celebrating the power of ethical property making to change lives. We're debunking the myth that you need a lot of money to get started in property, and we're inspiring each other to believe bigger, to be bolder, and to be game changers for good. And our game changer today is the uber talented and super engaging Richard W.J. Brown, entrepreneur, property investor, best-selling author, and host of the Property Voice podcast. Richard has been investing in property for over 15 years, including trading and flips, conversions, and developments in 4 countries, with over 75 units and assets worth over £8.5 million. He's the founder, as I mentioned, of the hugely popular Property Voice blog and podcast. And he's a twice best-selling Amazon author and YPN magazine columnist, writer, and mentor. In addition to his property experience, he's a many times entrepreneur in fields as diverse as technology, call centers, e-commerce, and commerce, with over 30 years professional experience and 18 years in financial services. Richard is married to the lovely Katya and has 3 adult children. And now I found Richard through his podcast. And what I really loved and fell in love with, if I'm allowed to say that, is that Richard's got a really caring approach, but it's also quite analytical and insightful. He, as well as interviewing people, he really shares his own insights. And he's so humble that I didn't actually realize how much Richard had done until many years into listening to him on the podcast. And I'm so relate well to his journey in personal growth as he's been on his property journey. And he started in property like I did later in life, shall we say. So I'm really excited today that Richard has joined you, and I think you're going to really love our conversation. So welcome, Property Game Changer, Richard Brown.
Wow, Stephanie, it's hi, how are you doing? It's what an intro. Thank you so much for that. It's a pleasure to be here, by the way. Thank you for inviting me.
Yeah, well, it's a pleasure to have you here. And if you have questions for Richard while we're talking, do put them in the comments. Or if you just like Richard's story, give us a hi or a thumbs up underneath. And that Richard does have some amazing giveaways later on. But enough of me for now. Richard, well, first of all, where are you? Because that's the story of itself.
Yeah, so yeah, I don't often sort of say this, but yeah, I'm in Brazil. I'm talking to you from Brazil. So the wonders of modern technology, first of all, and I guess you're going to ask me at some point, how on earth do I manage some of what I do, remotely and with this sort of location, etc. So I spread my time between the UK and Brazil predominantly, but yes, I'm currently in Brazil at the moment, as you can probably see with some of the backdrop there. It's not one of those screensaver things. It's real.
I can put you on your own, and that gives people a little bit more of you. But for many people, Richard, there is a moment where they decide to go into property. For some people, it's quite a stressful moment. For other people, it's more of a gradual approach. Was there a moment like that for you? How did you get started seriously into property?
There was a moment, I call it my eureka moment, actually. So it's funny you should say that. And you also, said I started later in life, which is also true. I was in my mid 40s. Was I? No, I was in my early 40s actually, and I was working at the time. I was working in financial services for a tech company. So business to business financial services. So really, I should know everything about money, right? But I knew it from a business to business perspective, but I didn't really always apply some of the principles personally. But I was had a sneaky pint on a summer's evening in a pub beer garden, and I was doodling. I was on my own. I was doodling on a napkin, and I was doodling property portfolio growth and compound interest. Would you believe? Probably a Friday evening. I'm not sure, but that's what I did, and it just struck me. I think I plotted out I could be a millionaire with about 14 properties. Over time and reinvesting profits. And it just really struck me. That was what I call my eureka moment. It changed everything. Ironically, just to kind of maybe lead us into a follow-on, but it was another 4 years between that realization and actually investing proper. So, but there was that eureka moment, and I remember it like it was yesterday.
So you were doodling, just going into the doodle a little bit. Were you starting from a set amount of money on this doodle? How were you starting off?
Yeah, well, it was basically it was like column. It was almost my own little spreadsheet. I was noting down on this napkin with columns. And yes, I started with essentially one property. So I picked a notional £100,000 property, and so what do I need to raise to get into that property? And then just extrapolating it out over time. And I think I got to about 14 properties in a millionaire status by the time I got to the bottom of the pint, as well as the bottom of the doodle.
So really, you're thinking of somewhere between maybe 25 and 30,000 pounds to start off with, and a millionaire within 14 properties, and being able to recycle out your money. And how do you put a timeline on it when you did this doodle? Maybe it wasn't as detailed as all this.
No, unfortunately. Well, a few things happened. So I had the realization, but I had a few blocks, mental blocks, and also knowledge gaps. So I didn't really know. So I didn't have 25 to 30,000 pounds. So that was the first thing. And so I thought you needed 25 to 30,000 pounds for every single property. You know, and obviously if you add that up, that was 14 properties. So help me with the maths, but you know, it was quite a lot of money, which I just did not have. I wasn't in a fantastic shape financially at that point in time. And in fact, to compound it, I'd also recently gone to see an IFA, financial advisor, who told me that to have something like a 30,000 a year pension, I needed to squirrel away, bear in mind my age, I needed to squirrel away, I think it was £800 a month to get something like a 30,000 pension in 25 years time. So by the time I was about 65-ish. So I didn't have £800 a month either. So I didn't have the 25, 30K starting capital, and I didn't have the £800 a month to get going. So that kind of constrained my thinking quite a bit. So that probably played into why there was a 4-year gap between the realization that it could change my life and actually making a start where it actually has changed my life, since. So
I'm so pleased.
Fortunately, I found out the secret after that. But yeah.
Well, we'll go into the secret, but I really love that you brought all that up, because now seeing you and listening to your podcast, hearing the much bigger deals you're doing and the development and so on, which I'm sure we'll come on to, you forget that people started and didn't know all of this at the start. So you didn't realize that you didn't need 25 to 30K to get started in property. And so tell us about the secret. What was the realization there?
Okay, so fast forward 4 years from that moment. So that was, well, it can probably work out. It must have been 2005, because in 2009, I did my first 3 property deals in that year. That was my first year proper. I did actually have an investment back in the mid-90s, but let's not go there, because there is a bit of pain there, or regret at least, because I don't own that property anymore. But so 2005 was the eureka moment, and 2009 was the first 3 properties. And in that first year, I've actually jotted down some notes here somewhere. And my very first property, I had £10,000. So, and I think the total investment required was 120,000. So I had 10 personally out of 120,000 total investment. And that was my first project. It was a bit hairy in many ways, probably bit off a little bit more than I could chew, in fairness. And then there was 2 other projects that quickly followed. Where there was limited amount of money. One was literally £1,500 as a fee. There was 100% financing, and there was another one which was about 10K. And I think the investment in that was about 110K. So, all in all, I think for just over 20,000, there was 3 properties in that first year. And that, just to quantify, I think the value of those properties was around about $500,000-ish. And so, when I look at that 4-year delay, I always say that 4-year delay cost me $2 million. So it's the value, it's the cost of delaying. That's the cost of delaying. So I could have been sat here 4 years ago, and be in the position I am in today had I started back then. And what I didn't know, the secret, is I didn't need all of that money myself. That is the secret. So the principle of using leverage, the principle of using other people's money, to grow was the secret, and that's the foundation of a lot of what happened. It's not the only foundation or the only secret, as it were, but it was certainly a big part of it.
And I just want to dwell on this a little bit longer. So many people, perhaps not even the people who are even aware to be watching something like this or listening to something like this, would be thinking, yes, I'd love to get started in property. I'm a bit behind where I wanted to have been by this period in time. And they had the mindset that you had. How did you go from that mindset to 3 properties in 3 years worth £500,000?
You make a really good point. Actually, say again, sorry.
3 properties in a year. Sorry, I just.
Yeah, no, it's fine. It's fine. Light's gone off for some reason, don't know why. But you make a really good point, because it's multi-leveled. I think the first thing is mindset, is belief. So if you start believing it's possible, and you can actually attract things into your life. Frankly, I know it sounds a bit woo-woo and a bit out there. But that's something that, the power of our subconscious, the power of the universe, frankly, I know it sounds weird, but it works. So that was one thing. The second thing is I didn't know what I didn't know. So there was a knowledge gap. And so in that 4 years, I started teaching myself. I started learning and being educated. It was a bit hairy around then, around about 2005, 2006. The market was going crazy. There was all sorts of crazy things happening. And there was lots of dodgy sorts of advice and schemes around that you had to sort of pick your way through. But essentially I got the knowledge. So the belief and the knowledge were two major things, I think, that came together to enable that to happen. And then I think, it's finding your flow, finding your fit. So for me, I'm what I call a value adding investor. So people do things in different ways. For me, it's, I like to quote Warren Buffett a lot. I don't liken myself to him in many ways, but I really like him and his principles. But he's a value investor, and I think I'm a value-adding investor. So I'm always looking to create value, create opportunities out of things, and add value, and maybe recycle. And so that became my core, really, adding value and recycling my cash, because I didn't have a lot of it, frankly. So I had to make it work really hard for me, the cash that I did have. But unlike perhaps you, I know that you've done things like rent to rent, certainly to get started. I didn't follow that line. I followed more of an investor, a small developer type of route. And frankly, I worked a little bit less, probably. I don't know.
Yeah.
But I think do a bit of work at the front end, and then it pays you, repeatedly.
Well,
so
I think
that was the big difference. Sorry.
You can safely say that you work a little less when you're sitting in Brazil. Let's face it, Richard. We've had a comment from Richard Parker who says, "Impressive journey, Richard. What's one thing, if there is one, that you would do differently if you were starting out again?"
Thanks, Richard, for the question. There's more than one thing. There's actually more than one thing, so it's like picking which one. I'd definitely start sooner. So, I mean, that's the easiest one. I told you it cost me £2 million to sit around for 4 years. So, without a shadow of a doubt, I would have started sooner. And I think probably the other thing is to work on mindset, because I had some money blocks, that existed, belief blocks, and so to kind of get them out of the way. You can do that yourself through personal growth and development, but you can also bring in other people around you who can raise you up. So they're probably the biggest things. Work on mindset and start as soon as you possibly can. And you'll make some mistakes, but guess what? In property, time's a great, it's a great healer. It's very forgiving. So, there's always a price to our education, by the way, whether we pay for it in terms of courses and training and things like that, or experience.
Brilliant answer. Thanks, Richard. And we've also had a comment from Howard saying it's a great video. So let's move on, Richard. So you got started. It's 2009. You bought 3 properties for 120 grand that are worth £500,000. And tell us where you went from those three to where you are now. That's a big question.
Yeah, I had about 20 grand, but 120 grand. So they were maybe the numbers got. Yeah, I had 20 grand for the three properties, well, more or less. So I hustled quite a bit, and I scaled through, the BRR strategy, buy, refurbish, refinance strategy. It was predominantly with single unit properties to begin with. And then I realized that I could scale up a little bit, as a lot of people do. So I moved into HMOs at some point. And I think around about 2012, I had a foundation of income. It was about 3,000 a month, something of that order. And I put my hand up for voluntary redundancy at work. I was still working in those first 3 years. And what I was doing, on the side. It was a side hustle, property investing. My poor old bosses didn't know that I was taking a few calls now and again, but it wasn't too much, I promise you. I wasn't abusing my time too much, and I gave back in different ways, trust me. But so yeah, I scaled up. I can't remember the exact number of properties in that 3 year period, but it was around about 3,000 or so, 3,500 in income that I had. And I put my hand up for redundancy in 2012. I got a small payoff, not a really big one, because putting your hand up, you don't get the best payoff. And that obviously now enabled me to sort of go again. And I replaced the six-figure income after the first year, pretty much. It was 11 months after going full-time in property, which was 2012.
And one thing I want to call out there is, you just mentioned the six-figure income, and previous to that, you said actually you weren't in a great place financially. So some people think, the higher the income, the better place you're going to be in, but that's not always the case. And actually, even with a low income, lower income, you can invest, and become a millionaire or whatever is your goal. So I just wanted to highlight that. We've had another question. So from Sergio, who said, "Hi Richard, congratulations on your amazing journey. What made you choosing property as the vehicle to freedom as opposed to other investments?"
Really good. Another really good question. Thanks, Sergio, for that. I think property's always got what I call an intrinsic value. So people will always need to live somewhere. And even if there's a property crash, those headlines that you see, and we've seen a few, by the way, in recent times, certainly whilst I've been operating, a property crash is maybe 15%, reduction in pricing. Well, that still leaves 85%. And if it's really bad, it's maybe 20% crash or 25% crash. It still leaves, 75% or more value in that asset, which if you look at stock market right now, if you just look at companies that are closing, a stock market crash can often mean companies going bust and being worth zero. So I think, stock market is the other classic asset class that people tend to invest in. But a lot of companies can literally go to zero. And I just didn't think property would go to zero. It might happen, but I don't think it will. I mean, I'm not a fortune teller. So stock market was another one of those asset classes that I looked into, stocks and shares investing. And I think the other really big difference with property is the ability to leverage. So you don't need all of the money to acquire the asset yourself. There's this beautiful thing called buy-to-let mortgages or other types of financing, where a lender will effectively, put in the lion's share of the investment. And if we get into things like bridging finance and development finance, and other forms of more complex creative financing strategies, you can put in surprisingly low amounts. So the ability to leverage there's a double-edged sword with leverage. Obviously, it can magnify your profits, but it can also magnify your losses too. So you need to be cautious. And so I always try and protect the downside, because of the potential risks. But that was the main reason why I chose property above, say, other assets.
Richard, there's so much to talk about with you, and I really do want to get into, the journey onto where you've gotten to. But just before we do, I do want to ask again, because I don't think we've explicitly touched on it. So you had, if I've got this correct now, £20,000 of your own money. You had the values that you needed for the three property, or the amount you needed for the three property. Is that 120,000?
I think I mixed a couple of examples, for you. So, which probably confused you, Stephanie. So apologies for that. So my very first property, I needed £10,000 of my own money. And that was my cash, personal cash, from a bonus actually at work. And it was the total investment. So the purchase price was 75,000, and there were other costs, which were big refurb, very big refurb, which took it up to 120,000. So my 10, and on a total investment of 120,000, and that property was worth 150 actually once it was fully renovated. So that was the first property. The second property was it was in Portugal, and it was I needed £1,500. £1,500 as a fee, but I got 100% bank financing on the property, and it was 180,000 euros. So I basically got a 180,000 euro property for £1,500, and today that's worth 370. I think it is 370,000 euros. And then the third one I mentioned was roughly 10,000 of my own cash. There was a developer who'd completed a development and had some remaining units, and they wanted to get off site. I don't recommend off plan, but completed developments are a different story. And so they wanted to get off site. So they were offering some pretty big discounts to move some of the last units. And they were prepared to do short-term financing on it as well. So I got 100% financing. The 10K that I spent on that was essentially fees. And then I sold that property for 130,000. And that, what I did there is I did a flip. I sold it to the sitting tenant because it was pre-tenanted. And I used the profit from that to subsidize one of my next deals. So I don't know if that's clarified it a bit more for you. It's probably about 21,500 of investment in that first year.
So what I was trying to get to is there's obviously a big gap, or there was a big gap between what was required, what you had, and I was just interested to give people ideas about how you bridge that gap as a beginner. And in some cases it was, well, those are days gone by now, you could get 100% finance from the banks, but that's not mainly or not straightforwardly available in the same way now. And so move us on from there about.
Let me say what is available now, because one thing I didn't stress is that on one of those properties I had a friends and family loan. So so if you've got people who love you, they'll probably give you better terms. So I was able to, on that first property I mentioned, the one I said I had 10,000 of my own money, I actually had £50,000 come in from friends and family. So to help me get going in that. So be nice to your friends and family, because they can help you get started into this business. But be careful with their money too.
Yes, and it's surprising, isn't it? Oh, I don't know if you found this. It's surprising who has actually starts offering you money and foisting money upon you once you start getting into property, and they're impressed by what you're achieving. So you started off in 2009, as we said. Tell us a little bit more about what's happened since then.
Yeah, so I mentioned, I kind of had a cookie cutter type of model: buy, refurbish, refinance. Perhaps some of the units I was converting were single lets, and then I moved to HMOs and a couple of service departments as well. And that took me probably, fairly consistently until around about 2017, 2018. So, and I think I'd probably got to around about 25 units, something like that, around about that number by about 2018, something. And then things took off. So since around about 2018, I've scaled to about 75, units, and that's with larger multiple developments. And that was another aha moment. That was another sort of realization that, I had my own blocks, my own glass ceiling, if you like. And I was quite happy poodling along doing ones and small HMOs. And then suddenly I realized that actually just doing sort of a larger project, between 4 and 12 units, as a conversion in particular, that's what I moved into, commercial conversions. It didn't take that much more to work for sure. It took more money, and you needed a different team to execute. But essentially, you could invest a similar amount of time. Some of the principles I had already learned, I could apply to that. And so I started scaling and doing larger projects. And that's where the growth came, really, the explosive growth. So the curve kind of went up quite a bit from 2018. So approximately another 50 units have been added in that approximate 2-year period.
That is really interesting, isn't it? Because from 2009 to 2018, you've gone to 25 units, and then you've massively gone up again within 2 years because of, as you said, everything you've learned has taken you to that place. But tell us a little bit about the mindset of going from, you know, your smaller units, small developments, you feel quite happy with them, you know how to do them, to do these multiple units.
Yeah, it's really interesting because there's I think you go in stages and levels as you go through the journey. So I always talk about fix and flex. So you fix on a strategy or a route or a direction and goals, and then you get there. And I liken it to climbing a mountain. So there's a peak up here, and you might not even see the peak because it's covered in clouds, for example. You might be able to see the peak, but it looks so massive to scale. But if you can get to the first level, then you've got a different perspective, and so you can see another level, and then you can just move up this mountain. So I think that was what was happening with me, is, you know, I was developing greater belief as I was getting more experienced. And then I just, the block was, you know, there was a money block in particular, because I didn't really understand about development finance in particular. So a lot of the projects that I was working on, the refurb element was quite small relative to the overall value of the project. Whereas on something like a conversion project, it actually flips around the other way. You know, so an example is one of the latest projects I've been working on. I'm looking at a crib sheet here. I paid $250,000 for a, you know, fairly run-down former office warehouse type of unit, and the development costs on that was $730,000 in total, including the purchase price. So it was double again to develop it out. But that's got a GV, gross development value, of $1 million. And I've sold it. I didn't intend to sell it, but I decided to, and can talk about that later. My principal strategy is not to sell, but on, you know, strategically I will sell, and so I got a good offer, so I agreed to sell that one. And but I've also retained part of the plot for myself, so there's a bit of value I've retained there as well. So I think it was belief, I think it was know-how, but you don't just walk into development finance either. So you need a track record. It's a bit of a chicken and egg situation with what I call the institutional lenders, because they won't just, usually they usually won't give you development finance unless you can prove that you've done a project, like they would lend on you. But how can you do the project if you haven't got the money? So it's, you know, it's a difficult one. So I bridge the gap between, you know, getting the, you know, institutional development finance and doing smaller projects with private financing. So and all that meant was I just needed to change the conversation. I needed to change my mindset, but then I needed to change the conversation. And I've got 3 or 4 really good private investors that have been with me now for a few years, and they've rolled over on a couple of different projects, their funds. They're fantastic people, you know, genuine friends, I would say they are. And so that's changed the world for me, you know, having them around me. By the way, when you talked earlier about, isn't it interesting who comes and offers you money and things like that? I didn't actually get a lot of that, even though I talked about having friends and family, you know, offering money to begin with. It took about 5 years before I could break through about 250,000 of funds raised. But now I've raised over 5 million, you know, in the second half of that 10-year cycle. So I know I'm going on a bit, shut me up if you need to. But, you know, I think the big part of it was belief. Then there was sort of this know-how. And here's the thing. The way you frame problems or issues in your mind is a big deal. So I used to say things like, I can't do that. You know already, Stephanie, where I'm going, you know, because you're putting a limiting belief on yourself with that kind of statement. But it was like, I can't do that. I can do 1s and 2s. I can do a little HMO. I can't do a commercial conversion. I can't do it. I haven't got the money. And then I reframe that as, how can I do that? And so once you then pose it as a problem, as a question, your mind starts working. I woke up in the middle of the night with answers, and people were coming into my life with solutions, and it was just amazing. It's just amazing, and it's quite a journey. And like I say, you're just moving up this mountain, you know, scaling as you go. But you have to become something to get to the top, and you have to grow into that, because I do believe we're not given, you know, stewardship or custodianship of high value things unless we've got the responsibility to be able to take care of them properly. So we have to grow into that capability, if you like, and it takes some time, unfortunately. There probably are ways to hack it and fast track it. You know, it took me a little while before I kind of realized, so maybe people can learn and do it faster than I did by just listening to what I did and doing it a little bit sooner.
Yeah, well, a couple of things. I know from listening to your podcast, for example, that you're in groups now with people who are doing very similar and in some cases much bigger things, and that really helped. And I also know that you have your own mentorship groups, where you've had a series on fairly recently where the people in your mentorship groups have been talking about, and that's been so interesting and instructive because they're going to their place in the mountain and you're also moving to a different place on the mountain. So do you want to tell us a little bit about maybe first of all the sort of mentorship that you have sought out, and then perhaps you could go on to the mentorship that you're offering?
Yeah, sure. Well, I mean, I think the first thing is we can be our own mentor. And you know, it's an interesting one. And I think my wife, who you met earlier briefly, I think, I'm not sure if you saw her, but you certainly probably heard her. But she always says, you know, ask good questions, and we can ask ourselves good questions. And if we've got an open mind to what the response is, rather than being defensive or whatever, judgmental or, you know, closed-minded, we can get answers. So we can be our own mentor, but equally, we only know what we know. So I think it's great to get an external input. So in my own particular case, I got a couple of really good property buddies, as I call them. I would say they're peers, you know, similar sort of level as me. No offense to anyone, we were kind of just in that sort of space. So, and we bounce things off each other, and we can be really open, and we're very insightful. And, you know, we just say, well, this is the problem. And they go, oh, well, have you tried that? No. Oh, okay, fine, just get on with that. And it's just that idea of being able to bounce off someone. So that was one level. Then another level is, you know, I'm a member of a mastermind group. It's actually a US one. And I was seeking out mentorship myself because, you know, I think we're all on this mountain. So keep my mountain analogy going. And if you can imagine the rope, well, someone, you know, someone's pulling someone else up the mountain, but that person will lose their energy and will, you know, lose their drive and focus if there's no one else pulling them up the mountain. So, you know, I need to look up and be pulled up the mountain as well. So I'm looking up to people who can challenge and stretch me and give me sort of, you know, something to aspire to. And so I'm doing that with my own group. And of course, I'm doing something similar. I don't mean it to sound it in a way that is anyway condescending, because I don't mean it that way, just at different stages of this journey. So I'm actually helping people up the mountain. And of course, you've got people on a similar level who are all supporting one another, because things can get tough. So it's great to have that little bit of support and accountability alongside you as well. So there's a couple of different levels there, above, below, and then on the same sort of level for a full 360 perspective, if you like.
That is so powerful, and I really love that you brought up that you can be your own mentor, because I think that's one of the things that we're, as humans on default setting, quite bad at. But when you bring some consciousness to it, it's really easy to get good at being your own mentor as well, and it adds a new dimension. There's so much more I want to go in. We have had another question. So Ashma has asked a very good question, which is excellent start, Richard. How did you manage to find 3 deals while working full time? And addition, 1 was in Portugal in a year. Any tips? And was it through networking?
I guess when you put it like that. Well, I think, to be fair, in the early stages of my investing journey, if you want to use that phrase, I used, you know, third parties, deal sources, and brokers predominantly to find me deals, because time was precious. Time was at a premium. I was working full time. I had a high, you know, powered job in a way. It was targeted, and I had to dedicate a lot of time to it. So I didn't have a lot of free time. So I outsourced, if you like, the deal finding role to third parties, and I paid them fees. So that's how I found my first deals. And the Portugal one was through an IFA. I'm trying to think now. There were deal sources for the other 2. So I paid fees. And, you know, what's the value of your time? So I kind of worked out that, you know, I think I paid on average, well, I paid $1,500 for the Portugal IFA deal. And I think I paid around about £3,000 each, something of that order, for the other 2. So what's the value of my time? So it could take an awful lot of time. And as I was working, I thought it was better to not lose my job and actually pay someone else to find them. As time has gone by, to pick up the secondary question about networking, referrals and networking has played a much bigger part in how I find opportunities. And in fact, I don't think I've paid a sourcing fee now for a number of years. So things have come to me through referral, through networking. There's probably and self-sourcing. So I've developed a few systems that I would use myself, but I have people working with me now who help me to do that. So it's a bit of an internal function.
And I'm guessing that with the Property Voice podcast, perhaps is that how you've one way that you've grown your network and found deals as well through the podcast?
Yeah, so I've always had a passion for sharing knowledge. So it started really. Well, there were two reasons why I started. One was so I didn't forget things that I was learning. So it was a great place to store, centrally information, so I wouldn't forget it, because sometimes my memory gets a bit ropey. And then the second reason is I have this sort of teaching, mentoring type of spirit in me, and that's never going to go. It's probably my purpose, actually. Is to share that knowledge. And then before I knew it, people starting to connect with me and ask me questions and, seek me out in one way or another. So I found I was answering forum posts. I found, people writing emails, and I was giving hints and tips. And of course, I knew less when I started. Well, I found this out. Maybe this will help you. But as time has gone on, of course, I've learned quite a lot through my own experience and through the knowledge. And then it's become, I guess, a bit of an authority in some senses. It's not just, lots of people have started a podcast, as you know, and they're not still doing a podcast. So It's been over 5 years. I forgot. I looked it up before we started talking. And it was the 3rd of April, 2015 was my very first podcast episode. So it's over 5 years now. So you've got this library bank, you've got, you are literally talking about your own values, who you are as a person every single week for 5.5 years. So you're putting yourself out there, and then that attracts people to you of all types. So I've attracted investment, I've attracted deals, I've attracted suppliers, partners, not life partners, but business partners, as a result of having the podcast and also the books that I've written too. So this content, putting good content out can attract people into your inner circle. Let's say that.
Yeah, Ajmal's just thanking you for your answer there, and started just saying hello. Let's move on, actually, because there's so much to cover with you, Richard. I'm not sure we'll get through it all, but let's certainly talk about the book. So can you talk to us more about your Property Investor Toolkit book?
This one.
Yes. Funny you should have that there. Quite a coincidence.
Yeah. Well, we might come back to that later. So 2015 was a big year for me, because obviously I've just mentioned that we launched the podcast in 2015, and later that year I released that book. As you can see, it's not a very big book. It's called Toolkit for a reason. And I have to say, I always say it took me 30 years to write that book, because I don't know if you can hear that. There's some noise in the background, but hopefully it's not disturbing you. But I say it took me 30 years because I always wanted to write a book, but a bit like if you don't have clarity, it doesn't get done. So I wanted to write a book, but I didn't know what about. So I had all sorts of ideas, which I probably won't share with you now. One was like a version of a Haynes manual for parenting, so it's kind of, I haven't written that book yet. And then so I just started to assemble, if you like, some, like a natural flow of starting out in property. What are the things you need to look out for? What are the foundational points? And what are the things that can help you to avoid some of the pitfalls? And then it just turned into a book. And I locked myself away for a long weekend. Well, there were a couple of long stints, because I tend to write in batches. So there were a couple of events where I wrote that book, and launched it in 2015. And it's done pretty well. It's a toolkit, as I mentioned. It's got lots of resources that are linked to it. So I tried to do something a little bit different. So it's got a lot of external resources, and if people write in, they get some bonuses like spreadsheets and things like that, checklists, that sort of thing. So I wanted to write a book which would help someone starting out, to avoid some of the pitfalls that don't wait 4 years and things like that.
And already, the questions that you get that we're getting today on the podcast, all the foundations for it will be in that Property Investor Toolkit. And I know you've got another book, Richard, so talk to us about what's in your second book.
That one.
Yes.
Hashtag PropTech. So this is really interesting because I guess this was I spent a year of my life around about 2017, I think it was, delving into it was very self-indulgent in a way, the idea of PropTech. Now I've been told, because we did a whole podcast series on it, I've been told it was a bit heavy. So yeah, listen to the feedback. But I was immersed into it. I was really fascinated by the idea of PropTech. So it's property and technology coming together. That's the principle of this. And I do believe it's the future, but maybe the future isn't quite on us just yet, and maybe it's an idea ahead of its time. So if you're interested potentially in looking at trends, if you're looking at maybe how technology, I think, will change property for all of us, and to be prepared for that, or even to capitalize on that, then PropTech, hashtag PropTech is the book for you. But I think it's very self-indulgent. I just was fascinated by talking to some of these founders of tech companies, PropTech companies, and learning all about blockchain and the sharing economy and artificial intelligence and all of this sort of stuff. So it was something of a passion project. But and then I was invited to speak on the topic, and I was like, I'm not an expert. I'm really not an expert on PropTech. So I felt a little bit embarrassed about being asked to speak. So I'm still a student of PropTech. So I think property strategy, how to structure deals and things like that is really my forte, my domain, if you like. And PropTech was this sort of passion project I got really interested in and a heart for. So that's that one. But yeah, it's there if you'd like to read up about the trends that are coming, some of which are upon us already.
Fabulous. Thanks for sharing that. So I know the Property Investor Toolkit, Matthew has commented that the Property Investor Toolkit is still one of the very best property books out there, highly recommended to all. So thanks for you, Matthew, and I would obviously expect that would be the case. So let's go back to you. We have had a couple more questions, which I'm going to try and squeeze in, but let's get back to your story. Tell us about some of the exciting bigger deals that you've now been doing. Give us some examples and maybe some high-level understanding.
Yeah, so I kind of gave one a little bit just now, which was the commercial conversion, converted into 11 units. It's paid $250 for it. I've sold it. I've just sold it for $1 million, and I carved out a piece. It's just a warehouse. It's a strip on a warehouse. But if I tell you this warehouse is next to a row of terrace houses, and if you imagine 2 terraces being the size of the warehouse, you can probably see where I'm going. Now, if I don't get planning to put 2 terraces on it, I've got a warehouse, so I've retained that. So I didn't intend to sell that. That was an interesting thing. I've been trying to build my portfolio because I've got a big vision. So my vision now is not just for me anymore. It goes beyond me. So why I'm pushing on instead of putting my feet up is because I do have this big vision. Anyway, I digress because you asked me about the projects. I've got a care home in Doncaster, which will be 5 units, mix of conversion and new build. There's 3 townhouses and 2 new build bungalows on that particular project. I've got a 4-unit, and I paid, these are round figures because I haven't prepared all of these numbers. I paid about $250 for that. It's going to cost me $300 to do the conversion into the townhouses, and then the bungalows will be free. Effectively, that will happen with that particular one. So the bungalows are probably worth about $200,000 each. So there'll be a cost actually attached to that. So it's not quite 400,000 profit. It's a little bit less than that. Don't want to mislead people. I've got a new build site down in Stoke, which is 4 new builds. I bought it with pre-existing planning. I've managed to increase the planning from 3 beds to 4 beds, so get a little bit extra out of it there. A couple of listed buildings. Can you see my face? Listed buildings. Try not to do too many listed buildings. Got a listed building project in Oswestry, which is a formal commercial building, which I paid $170,000 for, I think it was, and I'm going to sell that one for $470, having spent about $150 on converting it, something of that order. So that gives you a bit of a flavor. You can see that they're in the sort of 4 to sort of 12 unit mark. I was paying approximately, 180 to 250, mainly for those sort of sites. I was probably spending, depending on the nature of works, up to 500,000, let's say, in terms of development, and then the gross development values of those would probably be Doncaster was 1 million, the conversion I first mentioned was 1 million, the Oswestry one's about 500,000. So it's in the sort of 500,000 to 1 million range at the moment. And guess what? That's a great glass ceiling, isn't it? You know, so I've pitched myself in that level. Now, could I go and break through the glass ceiling and go above that? I had a realization earlier this year that somebody offered me a project where I would have to spend 3 million to acquire the property. And guess what I said to myself, Stephanie? Guess what I said to myself? I said, I can't do that.
Yeah.
So, you know, and then I caught myself. That's the thing. So when you catch yourself, so I caught myself. Oh, well, hang on a minute. No. How can I do that? So I reframed it. How can I do that? And then you never guess what, within a couple of days, a couple of people came into my world who could help me do that deal. As it happened, it fell apart because the person who brought me the deal wasn't direct to the vendor, and they didn't really have the clout that they were saying they did have. So it fell apart for that reason. But it really changed my thinking that I could move up to another level again. There was a slight difference there. I wasn't doing too much development. That was more of a paper. That was more of a asset split type, buying a block, converting it into single freeholds, and then selling the units off piecemeal. So there was less development risk in that particular one. So I would say that as you scale, there can be, you stretch out your comfort zone. You need different skill sets. And so you just manage that risk as you grow. There can be growing pains. So when I was doing the 3 million one, or wanted to do the 3 million one, I de-risked it by not making the development side of it as big. And it was much more of a title split, you know, planning and paper-based exercise to reduce the actual development risk that I might have had on a smaller project.
And I'm sure that people listening will be getting the feeling, perhaps you're already a property investor, you've done lots of things that we were talking about before, single lets, HMOs, and maybe you're wanting to go up a step, but with some expertise, and perhaps that would be, or would that be the right sort of person perhaps to join one of your groups? Richard, do you help people like that who want to do what you're doing?
Very much so. In fact, yeah, I've got a real heart for it. You know, I call myself a bit of a turnaround guy. And I love to see transition in people, in other people. It just really lights me up when I see that light bulb go on in their eyes. Not just that they can do something, but it actually when they do it, that really gives me a kick. And so I carve out a lot of time in my diary to support people. So we're just about to launch TPVA 5. It's very catchy, isn't it? The Property Voice Apprentice #5. So it'll be the 5th iteration, and that was launched in September. That's full. You know, we've got, depending on some final, you know, decisions, between 4 and 6 people who will join me in that. And I would say that every single, pretty much every single one of those people have got some kind of turnaround, or they've got a crossroads. They've reached a crossroads, and it's like, should I go this way? Should I go that way? And part of my role is to, you know, facilitate that change with them and help them to make that move. And I've done it myself, obviously, more than once, because we haven't even spoken about the fact my previous career before property. I've taught myself a few industries, different industries. I've taught myself different property strategies. You know, I think hopefully I've got something to give. And so hopefully those people who've been through that program can attest to that. But yeah, I love it, as you can probably tell from the way I'm talking.
And actually, people can actually, on your podcast, you can hear people talking about what they're doing and what their blocks have been and how they've moved forward, and they're discussing that with them. Before we close, I'll just take one more question, and then we can have a little bit to talk about your big vision that you mentioned earlier. But Howard has asked the question, which might be on many people's lips at the moment: how has COVID affected your investing and borrowing?
This is really interesting. I'll tell you why. Because, I mean, I mentioned earlier that I actually had my first investment in the mid-90s. So kind of dates me a little bit, doesn't it? But, you know, so the point is that I've been through a number of cycles, economic cycles and property cycles. And guess what? We just go through cycles. There is change. Now we've got COVID. Previously, we had the global financial crisis. We had Brexit in between. We'll have Brexit again, you know, as reality kicks in. We've had all sorts of economic shocks, the tech bubble. Lots of different things have happened. And so what I'm really trying to say is COVID is just another of one of those black swan events. And the longer we have been in this business, the more we get used to understanding that these black swan events, these unpredictable changes, are in fact predictable. So COVID is another one. I didn't see it coming as specifically, but what I would say is this: I try and talk about bulletproofing our portfolio and protecting the downside. So I've got a few things in place which help in that respect. So not over leveraging, for example, getting fixed rate mortgages, having a contingency fund. They're just some examples. It's not to say that I wasn't affected. I was badly affected. There's 4 elements to my property. There's investing, the short-term rentals, there is developments, and there is investor services, effectively like the mentoring. And 3 out of those 4 suffered. Service accommodation fell off a cliff overnight. Developments were halted, and I had extra voids in my rental portfolio all at once. So it was fantastic. But I think, as you try and be prepared for these things, that's the first thing. Second thing is you take action to try and mitigate the damage. So we repurpose the short-term accommodation. I put aside different funding mechanisms for the developments, and we worked on non-on-site activities, like, for example, planning. As far as the portfolio is concerned, we tried to minimize voids as much as we possibly could. So you put action in place. You don't bury your head in the sand. From a borrowing point of view, I think things halted for a period of time. I'll give you an example. I'm currently refinancing some of my US properties, and I started that over 3 months ago, and I still haven't got to the end of the refinancing. Probably should have just parked it and come back in again, because some lenders stopped lending, but now they're lending again. So it was temporary, is my point. So I think you need to put in some contingencies. You need to be not bury your head in the sand and be very, very proactive. And the people who've come out best, here have either pivoted, to coin a phrase, or taken defensive measures to, for example, service accommodation. One of my units, just to give a very specific example, I was averaging about 17,000, 18,000 a year in gross rent, and I just put it out there at about I think it's about $650 a month, just to get it rented for a short period of time. So I took a hit in terms of the gross revenue, but my phrase is live to fight another day. If we protect the downside, we will live to fight another day. And COVID is one of those events that we just need to survive from, if we're an existing investor. But equally, we can thrive. So the second part of that equation is I'm looking at opportunities. So that 3 million opportunity I talked about earlier came about in the last few months. So you're looking for opportunities out of adversity, as well as protecting the downside as well. So yes, it affected me quite, sharply for a period of time, but defensively and opportunistically, looking for a way out of that, planning our way through it. So thanks for that question. It's a very good one.
Great. It's that problem solving again. Now, Richard, an exciting thing for listeners and viewers is that you have some giveaways to tell us about. So
sure.
Talk to us about that and how people can get involved.
Sure. Okay. Well, we've talked about my books. Thank you for mentioning those. So what I wanted to do, the first thing is with my books, I want to give away 5 books of your choice. Now, but there's a twist. I don't want to give it to you as an individual if you're watching and you're listening to this. I want you to nominate someone to receive it. So don't try the, I'll just give it to my partner, it's for me really type of trick. I want you to be, this is an act of paying it forward. So I'm paying it forward by giving it to you, but you're paying it forward by nominating someone to receive it. So just pick one of the 2 books, either the Toolkit book or PropTech book, and just drop me a line. If you send it to admin@thepropertyvoice.net and nominate who you'd like to get that book, I'll send it to them free of charge. So just whichever book it is. That's the first gift. The second gift is for you if you are looking at this going, how can I follow more and get more? Well, I'm a columnist for YPN magazine. I've forgotten how many years now. It's about 3, I think. So I've got a reasonable back catalogue. Now, YPN magazine, Your Property Network, is subscription. So you can subscribe to the magazine and just read the articles. But guess what? I give away all of my articles for free. All you need to do is write that same email address. Thanks for posting it there, Stephanie. And ask to get the YPN magazines, and you'll get the entire back catalogue. There's quite a lot of content, obviously. So that's all free. And that's for you if you'd like to see, some of my ramblings over the last few years. And then the third thing this is an experiment. I don't know how this is going to go. We talked about it just quickly, didn't we, before we
Yeah.
started? But I do something called the Apprentice program, the Property Voice Apprentice program, and that's what you asked me about, and that's what 4 to 6 people are going to start in September. But I've just decided that I've got a heart for younger people who are starting out. I've got children, of this sort of age I'm about to talk about, 18 to 25, who want to make a start. My nephew actually is one of these people, and he's saying, "What should I do? What should I do?" And I'm like, "Well, read that book. That's a good idea. And watch this podcast. Or not watch it, but watch this video and listen to this podcast." But if there's maybe 3 or 4 people who are in the age group 18 to 25 who've got no experience, so you don't know what to do, but you really want to get involved in property, I'm offering to mentor or coach you as a group over the next few weeks. So just drop me a line if that's you. We'll have a conversation and we'll try and put something together. I don't know what the format's going to look like. There'll probably be a few group calls and maybe some one-to-ones. And I'm not going to charge for that. I just want to help people. So please respect that I'm not really looking to avoid a charge for mentoring for people who perhaps already doing really well. These people who just want to start and sort of make that, because I said earlier about start as soon as you can. So if you imagine if you're 18 years old and you did what I did when I was 40 something, be 30 years old and retired. So that would give me a lot of inspiration to perhaps work with some young people that way. There we go. There's my gifts.
That's fantastic. So the Young Apprentice is for 18 to 25. Did you say
18 to 25-year-olds? Yeah.
And everyone, whether they are wanting a free gift to nominate a friend, or whether they are thinking of themselves or someone they know for the Young Apprentice, it's admin@thepropertyvoice.net. And a great way to get started if you want more, Richard, is obviously the Property Voice podcast. So, Richard, we have covered a lot today, and we've only just barely skimmed across the surface of what you've been doing in life generally, and but particularly in the last 15 years in property. And we've gleaned just from your current location, and you're looking very relaxed there as you sit with a cool drink in Brazil. What's really changed the game in your life and your family's life through becoming a property investor?
What's changed the game, or what changes have I seen?
Well, I've probably confused it. When I think of being a game changer, first of all, it changes things for you and your family first, and then it obviously changes things more widely. But in the first instance, I'm just asking about for you and your family.
Yeah, I mean, this is hard for me sometimes to talk about, because I try and be humble. But essentially, well, it's just here's what our life will look like. It's homes in 3 locations. My wife is Brazilian, as I mentioned, and I'm British, so there's going to be bases there. And then the third one, we need to relocate one of our properties to make this one happen. So this one's still a work in progress. Is a home in the mountains where we can ski and also do summer sports. So that, my wife's on her last assignment from a work point of view. We're working towards her finishing that in a few years' time, and then we're going to flip between those 3 locations. So we can flip between 2 at the moment. We'll flip between the third when that happens, if not before, but around about a sort of time scale, and have this sort of international lifestyle, if you like. And we already travel to major sporting events like the Olympics. We were going to Tokyo this year, but unfortunately, obviously, it's been cancelled. So World Cups and Olympics, that's something we love to attend. We love to ski badly, but love to ski. So that's kind of the lifestyle that we have. We're not too ostentatious, so they're not mansions or anything that we're talking about, but they're nice spaces for us. So that's kind of, and it's also helped us to support our girls, our daughters. I've got 3 daughters. We've got 3 daughters, and it's funny because I think they were all living sort of a vocational or almost an activist type of life, which is code for they won't be rich. So we're sort of funding their education. We're funding their passion projects as a result of what we've been able to achieve. So that was the helping other people and building a legacy and passing it on. But we could literally stop right now. We don't need to do any more. In fact, somebody asked me this question the other day. Why are you carrying on? where are you putting yourself through all this? And that's when it comes to the big vision. There's, you know, mentioned it took me 30 years to write a book. Well, for a number of years now, probably a couple of decades, I've had this burning desire to have this foundation. I've kind of, forgotten about it a few times and let it drift, but it won't leave me alone. It's a good test of whether it's your passion. It was when it won't leave you alone. And so I want to have this foundation. And so what I'm doing right now is essentially our family's going to be well provided for, but what we're doing now is to grow our asset base so that it can outlive us and it can provide foundation. And we really want to help, people from disadvantaged backgrounds, people in developing countries, people who don't have opportunity. We're privileged. We do know that we're privileged and we're blessed. So we want to pass on some of that privilege and that blessing to other people. So I'm gunning for quite a significant foundation fund, which will be asset backed, which will hopefully live on for a few generations, even after I pass this earth. So that's what keeps me going. That's why I do what I do, and keep growing and keep sometimes pushing through the pain barrier, because it can be.
It can be. Oh, it just touches my heart speaking to you, Richard, even listening to you on the podcast. But I think today's been really special for me because we've found out so much more about you and your story. And I think when you've been talking about it, you do say sometimes you're humble, as I said, to the point where, your light doesn't always shine. And you've more recently started talking more about what you do. But it's hugely impressive, but it's also inspirational. And I love the way that you are also clearly setting out a roadmap for others who want to do what you've done. And I love the way you're setting up a foundation to help others who may not be able to come into this world at all. Richard is saying, great live, very professional show, and thank you. Richard, there were a few other questions, but sadly we have run out of time. So Richard, is there anything else you would like to share that you feel that we've not touched on today that you would like to leave people with?
Well, maybe two things. The first thing is to you, actually, Stephanie. So thank you so much. I leapt at the opportunity to accept your invitation. I told you before we came on air, but I wanted to say while we're on air as well. And because I really like what you're doing here. It's groundbreaking, and I've promoted the event as well amongst my community. So maybe you've got a new audience, and maybe I've got the opportunity of a new audience. So thank you, and I love the way you go about things. And obviously with Nikki and what you're doing there, it's fantastic what you're doing. So just hats off to you. Well done. I hope you go from strength to strength. But I think the other thing is just to really finish on this point of, kind of a reinforcement in a way, is that this old dog, that's me, has kind of made a transition and a turnaround, made a lot of mistakes, didn't have a lot to begin with, and somehow has kind of done okay. So I just want to encourage people to take control, take ownership, and take responsibility for their financial futures. Property is a great way to do that. Don't hesitate. Get the support you need. I'm not talking about necessarily mentoring. The first thing I say to people is you don't need to spend a lot of money. You can mentor yourself. You can do some heavy training. And just reach out to me and I'll tell you how you can do that. No problem. But just don't delay. Don't waste that 4 years like I did. Just get yourself out there. There's lots of ways of making a go of things in this business. You don't have to do exactly as I did. But there's a minimum of 40 ways to profit through property, because I wrote the article on that one. So yeah, just don't delay. Just put yourself out there and go for it. And give back as you go. That would probably be my parting comment. Give back as you go, because there's so much reciprocity, so much good feeling, and there's so many people in need as well. So just give along the way. It'd be a good thing to do.
And as we leave you all today, I just caught one of the comments coming in, one of the many comments coming in now. Martin's saying, great interview. Cordelia's saying, thank you, Richard, so many gems, #appreciated. And I just want to pile my appreciation on top of that, Richard. So thank you so much for joining us today and sharing so many incredible, inspirational, and also practical steps, stories. For now, it's goodbye from Richard Brown.
Thank you. Thanks so much.
It's goodbye from me. I'll see you soon.